Funding rate, reversal, and whale accumulation have combined to put Pepe in the spotlight, sparking speculation that the Memecoin could be on the brink of a major breakout over the past few days. Funding rates on major derivatives platforms have shifted from negative to positive, signaling a shift in market sentiment as long-side traders now pay shorts to remain in their positions on Monday. Weighted open interest funding hit plus 0.0104%. The first positive reading since last Friday when funding was still negative. Historically, every time Pepe's funding has flipped above zero, the price has enjoyed a strong bounce, most notably on July 7th. When that funding reversal coincided with a swift 15% rally, that pattern tells us market makers and speculators believe demand is increasing. But it also warns that leverage has crept back into the system, and a sudden shift could unleash a swift correction if sentiment sours meanwhile. On-chain whales have been quietly scooping up Pepe around the key support zone of $0.00011 observations. From whale tracking tools indicate several addresses accumulating large amounts of Pepe, just as retail sellers were capitulating near the prior low. This accumulation by significant holders has created a supply floor, as these large wallets, many with six-figure Pepe balances, are unlikely to sell into weakness, reducing the available liquidity on the sell side, confidence suggests. In expectation of higher prices, and such behavior often precedes broader bullish moves when other investors recognize the whale's conviction. Yet anchoring price to concentrated holdings introduces its own risk. If any of these whales decide to distribute during a fleeting spike, PEPE's thin order books could amplify losses for latecomers technically. PEPE has held above $0.00011 on both the weekly and daily timeframes, bouncing off the 50-day EMA on Friday and rejecting the broken downtrend line that once curbed rallies on the weekly chart. After retesting that $0.00011 base, Pepe pushed through $0.00012 on Monday, setting the stage to challenge the 50% Fibonacci retracement of the December to March range around $0.00016. A near 30% gain from current levels. Weekly RSI sits at 54, modestly above neutral, and MACD crossed bullish back in May, with expanding green histogram bars underscoring rising momentum on the daily scale. RSI has climbed to 56 after clearing the midpoint, reinforcing that buyers are gradually reclaiming control. However, rejection at $0.0001 for dollars this Tuesday, followed by a two-day 13% pullback, demonstrates that resistance remains stiff and profit-taking can occur quickly when buyers overextend or funding spikes to high for traders eyeing the $0.00011, $0.00012 zone as an entry area. It represents not just technical support, but an on-chain demand cluster. Centera's global in-out-of-the-money data shows approximately 34,690 addresses have amassed over $80.19 trillion. Pepe, at an average cost of $0.00011, this tight band of on-chain break even adds credence to its role as a pivot point should price slip below that level. These holders could shift to sellers, whereas staying above encourages new accumulation, but heavy stakes at a single cost basis can lead to mass liquidation if confidence breaks. So monitoring volume and large transfers near that threshold is critical. Funding's positive flip and whale interest set the narrative for a potential breakout. Yet caution is warranted first. Leverage flows back into a market, create vulnerability, an abrupt reversal in funding could trigger long liquidations, exacerbating a downturn second. Macro headwinds such as sudden regulatory news or broader crypto sell-offs could undercut even well-supported coins third. Memecoin sentiment is notoriously fickle. Today's hero can be tomorrow's zero. If a new meme captures social media attention, given that Pepe's narrative relies heavily on community hype, any shift away toward fresh memecoins could drain momentum faster than fundamentals suggest if bullish conditions persist.
however.
The next resistance hurdle stands at $0.00014 where Pepe has been rejected twice in recent sessions, and clearing it decisively on strong volume would confirm that buyers have absorbed selling pressure from their measured moves. $0.00016, aligning with the weekly Fibonacci target, and potentially $0.00018 if momentum accelerates to sustain such upward trajectories. Funding rates must remain modestly positive, ideally in the 0.005% to 0.015% range to reward. Bullish strength without overheating. Traders can manage risk by scaling into positions near $0.00011, placing stop-loss orders just below $0.00010 to limit downside in the event of a failed breakout, and trimming exposure around each resistance level to lock in gains ultimately. PEP's fate hinges on the delicate balance between leveraged, teed optimism and genuine accumulation when funding turns positive and whales enter build mode. Can presage vigorous rallies, but only if broader market conditions hold a breakout. Above 0.0001 for dollars with confirmatory volume and sustained funding would signal that a new leg up is indeed on the horizon, potentially doubling Pepe's value over subsequent weeks. Yet the specter of a leveraged unwind or shifting narrative underscores the need for vigilant risk management in this ever-dynamic Memecoin arena. The most profitable phase can be fleeting. As such, traders and investors should continually monitor on-chain whale movements, funding rate oscillations, and price action around key supports and resistances to navigate Pepe's next big move with surgical precision. As funding turns positive and whales continue their strategic accumulation around $0.00011, $0.00012, PET stands at a critical juncture, poised either for a significant breakout toward $0.00016 or a retracement if key supports fail. Traders and investors must weigh the optimism signaled by funding rate flips and on-chain whale conviction against the inherent risks of leveraged reversals and shifting Memecoin sentiment, aimed by anchoring entries near the established support zone, managing exposure through staggered stop losses, and watching for decisive volume on any break above 0.0001 for dollars. Market participants can position themselves to capture upside while limiting downside in the world of Memecoins, where momentum and risk are inseparable. Disciplined execution will determine who rides PEP's next potential surge and who gets left behind.